Hello everybody, today I'm gonna show you how my Monday trading was a break-even. So that means I didn't make and I didn't lose any money. So let's jump onto the charts and see what happened. The Monday trade was on the GBP USD at the 1 hour time frame. First we need to find our highs and our lows. Basically this is our low, which I mentioned in the previous videos, and this is our high. Now we just need to check which is the strong and which is the weak side of the movement, and because of this movement the price coming from the downside, that means the downside or the down part is the strong part. So we just need to put our indication right here, and the weak part is right here at the top. That means the demand zone is right here from the red candle until the blue candle wick. Let's see. And now guys, you can see, and here my microphone died, but that doesn't mean I won't tell you how I opened this position. I assume that the price is going to be bullish later because it hit the base demand zone or order block and the rejection immediately happened, but I waited for my sell limit to be fulfilled. Beside of that, I saw those candles swept out the previous liquidity, which was a major risk that the trend will be against me pretty soon. Although the price were bullish, but I entered the trade because I caught the supply zone in the premium level of the equilibrium. After the price had executed my positions, the market started to go sideways, so neither my take profit and nor my stop loss had been hit for a while. The reason behind it is simply the Monday news, which was high impact on the market and restricted on lots of prop firms if you don't have a swing account. When the news data came out, the price immediately reacted on it and broke the previous structure at the weak side. Before that I left the trade at the blue arrow, which means that the day was a little bit profit, but it's more like a break even because of the amount. Why I left from my position is basically in a normal volatile market the price should hit my TP or my stop loss within 2 hours. The summer trades are less volatile and more sensitive to liquidity. In order to that, I suggest you to manage risk much earlier than the other months. This doesn't mean that you are not following your strategy. It's about protecting your capital, which is a crucial point to stay profitable. After 3 hours, basically before 3 o'clock, right here I made a little profit, but basically it was a break even because I made $85. That means the price didn't even move well until the news hit the market. What you should see from this trade recap is basically that every major new event can cause high volatility in the market, and also before the event, especially 2 to 3 hours, it can cause just sideways, which means if you enter into a trade, that doesn't mean it's going to be your direction or take any take profit or hit your stop loss. Here you can see those news where you should avoid trading, especially PPI, CPI, NFP, FOMC and Fed speech, because these are high volatility news, and if you trade in these events, you can easily step out because of the slippage and because of the volatility. And if you take any trade, you can easily end up like me. So it means market is going on sideways and it doesn't take any direction until the news event. And also what you feel after a break even is basically take the profit out more earlier. I could make even more money that it's not a break even. But here's the thing. The break even is basically the thing that you are following your strategy and following and believing in your strategy. And this is the main point. Because in trading, you are not focusing on profits, you're focusing on your strategy. If you can keep your strategy rules consistent, that means you can become a profitable trader very easily. But if you're focusing on profits and you're cutting your trades earlier than it should, that means you're going to be unprofitable in a very short period of time.